All right. Let's see. Good morning, guys. Today is Wednesday, November 5th. So today's market open. Again, we are going to focus on the rejection scalps or on the scalps. And let's see. We're going to focus on the scalps since that's pretty much what we've been 232, 242. Since that's what I've automated. But market open, intraday market open will be for a buy, the one for 100 points stop loss, 200 points TP. And then let's focus on the scalps here. So there's four kinds of scalps. The first one, and I'm going for 1:3 on all of them. So whatever signifiers, and personally for me, I have automated all these entries. So we'll see. But the intraday is all right. So let's see how this goes. So we're looking at all these four charts. So whatever entry shows up, it's a 1:3 risk to reward. So you can see the market open rejection scalp. This is a 1:3 risk to reward. And on my upper right here, this is the crosses entries. And the bottom here is the impulse entry. And the bottom right is the, let's see. All right, so you can see 1:3 is currently running on the market open. And also, right, the intraday is a buy. So 200 points TP, 100 points stop loss. So I'm also in that one. So this is a bigger, so it's an intraday, so it's a bigger move. And we normally go with the trend for that one. And there we go, almost at a 1:3. And again, for the crosses, right? The crosses, and let me put this because I did do a write-up yesterday. This is the market open scalp. So it's one trade a day. So just looking for one trade a day. So again, for me, I said I have like 6 separate accounts. So for each account, I'm taking each of these strategies. So I really like even the SAR and EMA entries I used to take. I'm really not too focused on those because at this point, those are kind of tricky to automate. And still, so almost at TP for the market open scalp. This one is the impulse scalp. And this last one is the crosses scalp. And I'll go over them, I'll go over what. And there you go, full TP on the market open scalp. So for a nice 1:3 risk to reward. And for each of these strategies, I said like you can just risk 0.5% per trade. This one is the multi-crosses scalp. All right. So market open hits TP for 1:3 risk to reward. So that's good. A quick win right there. The chart to my upper right is, or let me go bottom left. So bottom left is the impulse entry. So for the impulse entries, I'm normally looking only for, I'm normally only looking for the impulse. So either 931, that's why I have like 2 trades per day, but typically it's like 1 trade per day because I've split them between 2 accounts. And again here, let's focus on this one, like the multiple crosses, which is what you take like a trade, every single trade that shows up. So let's look at this one here. And what I love about this one is that it has exit candles, right? So we did see in the past 2 days where we rode price for like 100 points on US30, which is pretty heavy for US30. So you can see this is still riding. And the best thing with this one is that it has exit signals. So when we see a yellow or a candle with like a yellow inverted triangle, that's our exit signal. And also like our regular crosses here, this one is still running. So again, for me, I've automated all these entries. So this one would be going for a 1:3 risk to reward as well. And this one, so these two are the same. So the upper right and bottom right are the same entries, same indicators. The only difference is that the upper right, you're going for a 1:2, 1:3 risk to reward, and you have a definite stop loss. So you're going for a 1:3, 20 point stop loss, and 60 points TP. Now, the one on the bottom right, the difference is that you normally wait either. You can go for a static 1:3 risk to reward, or wait for the exit signal to be fired, which is what typically I do. So you can see the exit signal. So the 1:3, typically on the upper right today, ended up losing. So what I do for that one, again, it's one trade a day. So what I do, I normally end up closing that account. Now, for this one, multiple crosses, which you still can typically go for a 1:3, but you're taking every single signal that comes between 9:30 to 11. So you can see here for this chart, this candle has this inverted triangle, and I can change the color to be a little bit more clear. So you take every single trade, but you use a lot size that for every 10 points on US30, maximum you're risking $250 or something. The essence of that is, so for example, if we measure the kind of loss for this one that was taken, if we were to apply a stop loss here, it was, and we can mark that up because even for this one, I've automated it. So the loss for this one was the candle with the exit signal was that. So this one was a 12-point loss, right? But again, I'm still waiting for the next signal. But for this candle, for this um, account that took the market open, so 1:3R, for the account that took the crosses entry, which is the first entry after 9:30, this one unfortunately was -1R. So far for the day, 3R win, -1R loss. So I'm still up about 2R. And this one I lost about like 0.25R. So I'm still up like 1.75R for the day on the scalps. Now for the impulse, for the impulse scalp, there's two ways to take it. Now, I did say impulse scalp, you go for 1:3 risk to reward and two trades per day, but I do have like an asterisk around it. So the reason for that asterisk is that you can either have a 9:30 a.m. signal. So the only guaranteed 9:30 a.m. signal that we will always have is this market open scalp. So this one you always have a market open scalp. I'm sorry, market open signal because it kind of follows this intraday market open directional trade. So the intraday, which is the one for 100 points TP, I'm sorry, 100 points stop loss and 200 points TP. And I think there was another one that fired. Okay, never mind. 100 points stop loss, 200 points TP is that it's ideally looking at what direction is the market trending at before market open on the 15-minute time frame. So personally, I use the 15-minute time frame. You can use the 5, you can use the 30, you can use whatever. But personally, I look at what direction is the market trending at. So like for example, and you go for a 1:2 risk to reward. So you can see like yesterday, we got stopped out, but price still reversed to the upside and went to the direction expected. And then I think the day before had a nice 1:2 risk to reward win. The last 4 days before this were all losing days, right? So I had like a 4 or 5 day losing streak. 1, 2, 3, 4, 5 day losing streak. And then again, so that would have been -5R, and then you win 2R here. So you're only down like -3R. But then again, right, we had talked about like from 22nd of October we had an 8-day winning streak for our 1:2 hour. So you can see all these days. And again, this one is literally one trade a day. So nowadays I've kind of pushed back, or I'm trying to move along to a scenario where I'm only taking like one trade a day and um trying to automate most of these entries. Now, the impulse entry, sometimes there's a 9:30 a.m. signal. So like today and yesterday, there wasn't a 9:30 a.m. signal. So the accounts that wait for a 9:30 a.m. only signal, like today and yesterday, they didn't take anything. Now, typically you get another signal after 9:30 a.m. So that's why I'm putting it at quote unquote two trades a day, because sometimes you'll have two trades a day, or sometimes you'll have at least one trade a day. Now, this one, so the crosses scalp, again, here, you're just waiting for the first signal after market open, similar to this market open scalp. So you're waiting for the first signal after market open. So today for the crosses entry, the first signal came at 9:33, and unfortunately it ended up losing. Now, the charts on my upper right and bottom right is the same indicator. The only difference, so for example, here you can see that between these two charts, this buy signal and this sell signal are not showing up on the chart that's under. The reason for that is, since I'm taking multiple trades on the chart to my bottom right, I want to filter out the signals that show up during consolidation. Again, since I'm taking multiple trades, I want to filter out the signals that come up during consolidation, because again, like with all my strategies, the biggest weakness or the biggest downfall to any of them is a trending market. Because again, for me, I'm scalping, and 20 points for US30 is not a big thing. So that can get wiped out easily. So I really don't want to be inside a trade and then I exit a trade back and forth. So that's why for this bottom one, I filter out the consolidating signals, and then I now wait for the next ones. So yesterday I think we had like four signals or so. Um, and for this multiple crosses, I think eventually, because I think I'm leaning towards moving out of the SAR and this EMA entries, which actually we do have an SAR entry that's coming here. I think what we'll do is that we'll probably gravitate towards one of the crosses entries, 86.1. So there's a potential buy here on US30. We'll gravitate. Okay, so I'm taking a buy here on US30, but I'm entering with the, what is it called? I'm entering the 1:2 risk to reward entry. I'm in that. And then now we wait, the one we use to track our official trades, we wait for a crossover. So I'm still waiting for the crossover one. So I'm already in the 1:2 from right there. And this is based on the 15-minute. And then once this green X closes, I'm entering the trade with a 1:1 risk to reward. So still we don't have a green X. And the reason I want to move to the crosses is that the crosses and some of the others have a 1:3 risk to reward. But this one that we've always, and there we goes the green X. So I'm in that trade there for a buy on US30. The reason I also want to move to the crosses is that they have a 1:3 risk to reward, or even at the very least, the market open rejection scalp. So pretty much any of this. So any of this here, they have a 1:3 risk to reward, compared to like what we use here for the official trade, which has a 1:1 risk to reward. So it's like with a 1:1 risk to reward, if you hit stop loss, then guess what? You need like one more trade to go back to break even. So it's like you're always playing catch up. Whilst if you're doing a 1:3 risk to reward, and you have a strategy that has a good win rate, even though you lose three trades in a row, you only need one winning trade to go back to break even. So that's why I want to focus on trades that have like multiple risk to rewards. But for right now, we'll still use this one until I can figure out which one we'll use going forward. But right now, for the official trades, we'll kind of just keep using what we've been using until I figure, or until I get some more data for this month. And I think this one is almost at TP. So this one entry was at 47,104. So I'll just mark this up. 47,104. That was the entry. This one was based off of a 15-minute SAR rejection scalp. Let's see. I think it might have, I need to go back and look at my accounts. SAR rejection scalp on the 15-minute. All right, so depending on slippage and all, this one did, yeah, so it hit TP on my accounts. So I'm out of this trade, or I'm out of these trades here, the 1:2 and also the 1:1. So depending on the entry area, you could have either gotten slipped out of the trade or you could still be running. So let's see. What else do we have? I don't want to miss this impulse entry here. All right, we're still waiting for these crosses. So right now, I'll focus on these crosses entries, these multiple crosses, so that we can see if we can catch some. But I think eventually I may go for this multiple crosses entry. Okay, so here we're about to print an impulse buy entry. So this is the first trade after 9:30. So one of my accounts is already in this trade, right? So it has already printed a buy signal. So now this one, it's going for like a 1:3 risk to reward. And we'll see how this pushes. All right, so nice push there. All right, so for today so far, we have a 0.75 gain here on Wednesday. Yesterday, we took an L. And again, right, you see with this 1:1 risk to rewards, like you win one, you lose the next one, and then you kind of all over at break even and all. So we'll see. So this one, the impulse one is running, and hopefully that one hits TP as well. And you can see the difference between these two charts, the upper right and the bottom right. It filters out this signal. So for example, this sell signal here happened during a consolidating period. So like, for example, if the account that was taking this entry took this, you can see I would have lost 90, about 20 points. Like I would have gotten taken out at 20 point stop loss. All right, so the impulse one is almost at TP. Actually, it already hit TP on mine. So that's a nice win right there. So for today, like just by looking, and then what I do, I close out the account that's taking the 1:3 or the impulse trade. So for today, with these scalps, we have a 3-hour win minus 1 hour loss, 3-hour win. So that's 3 plus 3, that's 6 hour minus 1, that's 5 hour. And then for the multiple crosses, I've only lost like 0.25 hour. So I'm up for the day like 4.75 hour. And typically, like for this ones, I say for these scalps, I recommend risking like 0.5% per trade. The only one I would say to risk 1% per trade is the crosses scalp, like this one, because upon backtesting it, and yesterday we went over all those statistics because I had backtested all these strategies like since January. So the crosses one, I think, would have had a 64%, 64-hour return. And let's look at this multiple crosses one. So we just fired a multiple crosses entry here, and then we can kind of follow it. Give me a second here. All right, so we can follow this and see how this one would go. So typically, again, since you're looking to take every single trade that comes after market open, you kind of just leave your open stop loss, and open TP. But TP you can cap at 1:3, or you can cap at 60 points. And then for the stop loss, it's either you wait for the exit signal, which should fire, and pretty much like what it did here. So which should fire sometimes. If it goes against you, maybe it goes against you by like 20 points or so. Overview. Impulse, market open. Hmm. All right. For this SARs, really, I do not see anything. Oh, I forgot to take a screen grab of this for my journal. And pretty much like after automating all of this, like it gets easier for me to trade without even doing this manual trades for the SARs and EMAs and whatnot. All right, so we have an SAR up here, 41, 51. All right, so let's see here. All right, so I want you to observe this. So observe this, multiple crosses, it's still going, right? So we are still pushing up on that. Mm. All right, so you can see this one is still running, right? The multiple crosses entry, like this one is still pushing up to TP. Well, actually, it has an open TP, right? So if it had like give me a second here, 241, 251. So there is a sell here for US30, but I think US30 will push up or will spike from here, but I'm in like a 1:2 sell here. And I'm not too confident on this particular entry because we are heavily bullish on US30. But right now, then I wait for the 1:1 entry. And the goal with this SAR entries or this SAR rejection scalps is that you wait for, I'm sorry, you have to take each and every one of them. So you can see this one is still going, right? So if you had a static TP, which is what I had, I normally start trailing at 60 points, would have already exited that at ideally like, 1:3 risk to reward. And then it's still going. So keep in mind the exit signal hasn't fired, right? So, and I'll change the visualization of the indicator to show the exit signals better. But the exit signal is going to be the candle, the reverse candle that's going to have an inverted triangle. So at this point, this trade, you would have been riding it for so far, price has pushed up 100 points. So 3 days in a row, we've had a 100-point push for US30 on this scalps right here. Let's see. All right. So one thing, so still waiting on the cross on the change of structure one here. And then I'll enter the 1:1 risk to reward here. And we'll see. And the intraday, guess what? The intraday almost at full TP. The intraday market open entry, the one that goes for for a 1:2 for 100 points stop loss and 200 points TP, almost at full TP there. And there it is. I'm in that 1:1 here. So let's see. Again, we're still bullish here on US30, but for this manual SAR and EMA rejection scalps, you have to take each and every single trade, so that you can have good statistics for it. So that one again is pushing. I'm looking for something here. There's the fifth. And four. All right. Full TP on that entry for a 1:1. So again, for today, we add another 0.5% gain right there. So 1.5% for the day. And guess what? So let's look at this one, right? This one is still going. The multiple crosses entry, the second multiple crosses entry of the day, still pushing, right? Still, we don't have an exit signal. So this is still going, and we are, what is this? The height of it was about 100 points, but we are still going. Now, one thing to keep in mind for this multiple crosses, which is what I think we'll end up using to go for, or we'll end up using for our official trades, is that personally, I do recommend starting to trail the stop loss either at 60 points or at 80 points. The reason for that is that most of these big moves, like these 100-point moves without a reversal, they really don't happen every day. They happen like when markets are trending. And again, we know that not every day will you get a trending market. So some days you'll get a back and forth market. So personally, for me, I normally start trailing my stop loss at 60 points, which is already pretty heavy. So if I'm risking, and there goes the exit candle, I think this might be the exit candle. But if you think about it, like and there goes the exit candle, right? So you can see if I zoom in, you can see this exit candle has that inverted triangle there, just telling you to exit the position. And again, for me, this is something that I've automated. So you can see here, the move was with the exit candle, the move was about 67 points or about 70 points. But the idea is that for somebody like me who's risking like for every 10 points move, I either gain or lose $250. A 60-point move for me makes me $1,500. So, for example, to put this in perspective for the trades of today, this trade here, it trailed a little bit. I think I made 1700 on this last move here. And then this one here, I lost $500. So I made like $1,200 for the day. And the goal, and I'll show you this, right? I think I logged into my, what is it? I logged into my journal yesterday, and we can do that again to kind of visualize it. To kind of visualize it. So let's see. All right. So if we look at this journal, so you can see all these journals represent the number of accounts I have. So in total, I have 6 accounts. So the multiple crosses account, and this one I just started like yesterday, not yesterday, beginning of this week. So you can see on Monday, we had like 12 filtered out trades. So 1,200 yesterday, $897 out of 3 trades. Now, of course, today I haven't uploaded the journal, but today so far it's 1,700 minus 500. So it's about 1,200 in profit for the day today. So for this account, for these multiple crosses, I think they're good, especially if you are looking to compound your account and looking to have like those small incremental gains every so often. Now the last entry here we can take, and let's see, is this a retest of this 30-minute EMA 2? 33, yeah. So it's in a supply zone. So I'll put an alert here. 33.1 to 43.1 here. And then we'll see. All right, so let's keep following this and see. how this goes. All right, so you can see on my upper right chart and bottom right chart, same indicator. The only difference is that on my bottom right, I have filtered out all these signals. So for example, here, all of these signals are in a consolidating range. So you don't want, especially if you're taking multiple trades because it's like quick scalps, you don't want to, keep entering a lot of trades that are not of good quality because if you enter a bunch of trades that are not of good quality, you end up taking like small losses, like $250 here, $500 there, and eventually that adds up and eats into your profits. And I don't think I took a screen grab of this trade here. Uh, so this one is 47 250, 47 277. This was based on this, so 277. So the entry was. Let's see our rejection scalp. All right, so two back-to-back wins for today for the manual entries. And let's see here. Um, US30 trade. All right, so this trade here is still running, so hopefully we can push back up and go to TP on this particular trade. There is a nice sell zone or supply zone here, the intersection of these two candles, and the nice bullish structure here. All right, so we'll see if we get anything else. For the EMAs, nothing. Give me 1 second. 9:30. Away. Mm, 40. Mhm. 45. All right, let's see if we'll get any other scalp entry here. I may have to separate this into two separate charts because I don't like the way I have to keep zooming in and out. We had another impulse entry here, but for this impulse trade, again, I only take the first two trades of the market open. So it's either a 9:30 a.m. and the one that comes after 9:30. So if there's no 9:30, then the account that takes the 9:30, I just close it or it just automatically closes. And then the other account waits for the next trade or the next setup after 9:30. Now, the impulse entries, they show you like the volume in the market. So it shows you like where the push is happening in the market. So these impulse trades come up during periods of like a big, periods where volatility or liquidity is injected into the market. And that's how then the indicator picks up that volume. If there's a spike in volume, then it prints out a signal in that direction. All right, we have a buy here for the multiple crosses. So let's kind of follow this and see how that one will go, right? So we are following this one and see this time. So again, for me, no stop loss. And then I start trailing my stop loss. I'm sorry, I start trailing my stop loss at 60 points, or I wait for the exit signal, whichever comes first. So I can see my account, the account that's taking all these entries. It's already in this trade. So let's see how this one will end up going. See if maybe we can get another 100 point or so push. I still expect price to push back up to go to TP for this intraday market open trade. So I still expect price to push up. So we do have some bearish order blocks here on US30, but I do expect price to push up. And there we go. And let's see if we can get to that 1:3 area. So I'm almost there. And we just need a big spike and push up here. And then my stop loss will start trailing. So this is the beauty of this setup. And it's so chill and it's so right, and you filter out all the noise. So you can see the noise between the top and the bottom. The only one I use the top for is the first trade after market open. And then the bottom one is like I just wait for the signals that are outside areas of consolidation. All right, so I'm almost at 60 points TP here, which my stop loss should start trailing. And there we go. We've hit the 60-point marker. So at the 60-point marker, it's your decision to either exit at 60 point, or you can, like I'll always tell you guys when the exit signal comes. So the exit, I mean, there's pros and cons for both. The pros for waiting for the exit signal is that sometimes even price will trend for 200 points and you'll literally ride price for 200 points. The 60 points is just to secure your profit. So I think at the very least, it's key to secure your profit at some level, because not every day will you get like 100-point move, like a 200-point move or whatnot. So I think it's always good to trail your stop loss at some point. So it can be 60 points. I wanted to start trailing at 80 points. So 80 points is a good sweet spot to start trailing it. But for me personally, I just, do the 60 points. So for example, if we do the math here, on a 200K account, which is what I'm using. So let's assume, so this one was at, and I'm actually out of that position. So the first trade was was about 1700 in profit. The second one, which is this one, and I'm out of the position due to the trailing stop having kicked me out. So 1700 plus 1500, that is 3200 minus 500, which is the first losing trade we had here. So 3200 minus 500, that's 2700. So 2700, and you can see I showed you guys with my journal, like uh it's consistent, right? You have consistent wins. So you probably are looking to make between, and again, this is a 200K account, so looking to make between 500 to $1,000 a day, which is good. So that's why I'm waiting for the end of this month, because I did say that I am considering doubling my lot size. But you want to be careful. What you want to have in mind is that, for example, if we look at the trades from yesterday, you want to be careful about, because you'll definitely have some times where you have four trades and then three of those trades are kind of quote unquote small losing trades, but then you have a big trade because again, this one we are typically, hitting like 1:4, 1:3. You want to be careful about these small trades because sometimes these small trades, you don't want to have like $1,000 losing trade and then another $1,000 losing trade and then another $1,000 losing trade, because that will add up to your statistics, right? So you want to, at the very least, have a use a lot size such that for every 10 points at the very least, or average, on average, for a 10-point move on US30, you're losing or gaining 250 points, because when an exit candle comes immediately after or almost immediately after the entry candle, at most, there's some I've seen that some go even 50 points below your entry. So you want to keep that in mind, such that if you use a lot size, that because sometimes you can have a big spike against you for your exit candle. And remember, you see like this exit candle that's happening right now. So this exit candle, if the entry candle was somewhere above here, was somewhere above here, and then all of a sudden price goes against you and the exit candle ends up like 40 points below your entry candle, and then let's say you're using a lot size such that for every 10 points you're losing or gaining $1,000, you can see with that reversal you can lose $4,000. So even on a 200K account, that's almost like half of your daily drawdown. So you kind of want to have a long game kind of picture in your mind for these strategies, such that you're just thinking of, I'll take like small losses here and there, but then I'm aiming to capture a bigger move or to capture a consistent 60 points or 80 points per move, and then that eventually does add up. And then, right, even though it's like thinking of, or you want to capitalize more on these big moves, then you can think in the sense that, oh, hey, I can have two accounts, I can have three accounts, because let's even assume that the average, and for me, I'll make the decision on whether I want to double the lot size at the end of this month. But if I double the lot size, by doubling, I mean for every 10 points, I'll probably be looking to gain or lose $500. So for that one, right, on average, let's assume even on the low end, I'm averaging $500 a day on this account. $500 with, say, on average, 20 days, 20 trading days a month. That's what, $10,000, right? $10,000 a month. And then let's assume you get another account. That's 20,000. Let's assume you have three accounts. That's 30,000. So I think for me, trading has gotten to a part where I'm now thinking of the long game. I'm now thinking of how can I identify which are my most profitable strategies. And then I can, ask myself, how do I automate these strategies? Mm. How do I automate these strategies? And it really gives you like a lot of peace of mind. So for example, it's like for me, all these four strategies here, all these four items on the chart here are like fully automated. So right now I don't even have to be trading this manual manual entries here for SAR and EMA rejection scalps. So we'll see. Even for today, I'll end the live session a little bit early, like at 10:30. So I did say previously, like the live sessions will end up either being the first 30 minutes of market open or will only be the first 1 hour. Because again, my focus right now is to just take these scalps. And eventually we'll just end up selecting one of this. And mostly it's going to be either the one trade a day, which is the crosses for the crosses scalp for a 1:3, or the multiple crosses scalps. Um, and then we'll just pick one of those for to track our trades. Now for this one, you can see if you are waiting for the exit signal. So somebody like me, I took profit at And you can see, I'll draw for you the difference. The difference between where you choose to exit is this. So for me, instead of having a fixed stop loss, I have a trailing stop loss. So as soon as price hits 60 points, guess what? My stop loss starts trailing. So if there's a big push, right, it starts trailing. Now, if you wait for the, if for this trade, you would have waited for the exit signal. The exit signal came at this candle right here, this red candle right here. And you can see the exit signal. If you're waiting for the exit signal, you'd have only locked in 40 points. So I think at the very least, it's better to trail your stop loss. And again, the opposite is true. Sometimes the exit signal will come after price has trended for 200 points, for 150 points. But you kind of now have to ask yourself, how often will price trend vis-a-vis how often will price hit 60 points first? So I think in most instances, price will hit 60 points or price will hit 60 points more times than it will trend 150 points, 200 points. So if you add those 60, those little 60 points here, 80 points here, those, those do add up. And eventually, I think you end up making way more than even um, making way more, making way more than even somebody who's waiting for the exit signal. But guess what? The alternative is even true, which is even something personally I'm considering, is you have two accounts for the multiple crosses. One account, you trail your stop at 60 points, which is what I'm doing. And guess what? The other account, you just let it ride. So you just wait for the exit candle to show up. Whether it shows up 40 points from your entry, whether it shows up 200 points from your entry. So that's another way to also diversify the same strategy. All right, so here we're definitely having trouble breaking. So number one, two things here. So we are in a supply zone for this trade. So for anybody who normally sets break even, so I don't set break even on any of my strategies, but for anybody who sets break even, for this 1:2 risk to reward trade, you can set break even, but for me, it's either stop loss or take profit because eventually, right, with a 1:2 risk to reward and testing out this strategy, it is very profitable. The only other thing I know we're having issue breaking here is we're having issues breaking is all this bearish order blocks. So price can easily reverse back down from here. But if we look at this bearish order blocks, you can see here, we have an hourly bearish high, hourly bearish low, 30-minute bearish high, 30-minute bearish low, 15-minute bearish high, 15-minute bearish low. So buyers need a lot of volume or a lot of pressure to break past this, order block. So for me, I'm still going to keep holding this trade. And then we'll see. But if this comes back down, what will happen is that US30 will just start ranging, right? Because you can see here, if we look at it, price is pretty much in a range, or price is pretty much looking to range. Now, the only other thing that's holding, or the only other good thing for this intraday market open buy is that we are trending to the upside. So you can see, I forget what this pattern is called. And let me draw it better. I think it's like a symmetrical triangle or something, right? So if you look at this, price is squeezing. So price is squeezing there. So you're having equal highs and then higher lows. So typically when that happens, a good amount of times price pushes up and squeezes and breaks past and keeps pushing there. But on the alternative, it is definitely possible to break back down below this bottom channel and then take out all these liquidity levels that are right here. But for me, I am hedging that price will push up from here and squeeze past this triangle. So I don't even, at the very least, maybe come down and test this range right here, but I don't even think that will happen. So I think price will just push up from here. So maybe something like that. So that's what I would, or that's what I'm expecting to happen. But we'll see. Let's see if we've had any other crosses entries here. So far, not really. And we might start getting some sell entries here for the crosses based off of how price is moving. We might get a sell entry some place here. So you can see it's already printed, right? This sell entry, or I think it's going to print on this candle. But of course, the reason it's not showing up on the bottom chart is that price is ranging, right? So we are not looking at the top chart. We are looking at this. We're not looking at the top right chart. We are looking at this bottom right chart here. So price has retested. Price has retested what 30-minute. I wouldn't take a buy here because we have a bearish order block. All right. So two things to interpret the move that's happening now. The first way to interpret it is if we expect price to push back up, and there's definitely a bunch of bearish order blocks here, buyers have to pick up liquidity from somewhere. So by turning on the zones here, you can see that we're in a demand zone. Now, as much as we are also in a demand zone, we also have some EMAs that are here. And the EMAs are the hourly EMA. So price on the hourly time frame, price has already closed above the hourly EMA. We are also above the 4-hour EMA one. We are above the 30-minute EMA one. We are above the 15-minute EMA one as well. So if buyers, because I had talked about buyers need a lot of volume and a lot of pressure to break all these order blocks that we are seeing here. So sellers were pushing price down here, so buyers have to go back somewhere to pick up liquidity. So we already know that we're in a demand zone, or price came back, and even in the channel that I drew here, we know that we have equal highs, but we are also forming higher lows. So in order for for buyers to possibly break, and if they break those equal highs, it will be a big push up for US30. So for them to break those equal highs in an area that has a lot of bearish order blocks, and you see the wick on that candle, on that 15-minute candle. You just look at what is price telling you. Where is price going? Where is price coming from? What price is telling me, like just by looking at the chart, because again, I'm expecting US30 to push up. I ask myself, where is this wick rejecting from? This wick is rejecting from four EMAs, two high time frame EMAs, a 4-hour EMA, an hourly EMA, a 15-minute EMA, and a 30-minute EMAs. So we have price rejecting from especially a 4-hour EMA, which I rarely get to see, especially when trading. We are rejecting off of that. Now, if sellers do break and close below the 4-hour and hourly EMA, at that point I may start, turning bullish. I'm sorry, turning bearish for US30. But right now, especially seeing this weak rejection off of this four EMAs and especially two high time frame EMAs, that's telling me that, oh, hey, the buyers needed to pick up liquidity from somewhere in order to go back out and um take the take out the sellers. And guess what we just did? We just printed a buy multiple cross here on US30. So you know what we're going to do? We're just going to follow this as well. But again, this is already being taken, or I've already taken this in an account, or in the account that's taking this trades for me. So we kind of just follow this and see if we get a push up, or if we get an exit signal before price pushes up. But you can see here, we started having a sell momentum, but then what? We ended up having a buy momentum, which is what we are having right now. All right, so it might be the exit candle or might not be. So we'll see. So you can see the yellow inverted triangle. So that has already shown that it might start to print. So for me, this one, if this yellow, which it looks like it will close that way, if this candle closes as an inverted triangle, so for me, I'm out of this trade at this amount of points. So let's do the math here. So this is 30 points, right? So for me, for this particular trade, that was a $975 dollar loss. But you can see here, we are about to print another buy signal. So let's see if we are going to print that. And if we print it, again, guess what? The account that I have will take it. So I'm in that buy as well in that one account. And then let's see. So what's happening here is that we are just having that big fight with the buyers and sellers. So personally for me, I'm in this trade, and let's see if we can recoup that loss. So by doing the math, so I was net positive $2,700 minus 975. I'll just call it $1,000. So 2,700 minus $1,000, that's 1,700. So I'm still up $1,700 on this one account for this multiple entries. And now let's see if we can push up for this trade, or if we are going to end up, taking an L on it. So hopefully we push up and maybe get a big, because here, based off of what I'm seeing, all we need is a good spike up in price, and we'll start riding price pretty heavily, even without any retracement. So this is a possible, especially how we formed two buys here. This is an entry that can easily ride or push up for even 200 points or so, because I feel like buyers have already picked up that liquidity at the bottom here. So it might just be a matter of time before maybe we push up, but we'll just see how that goes for this account. So I'm just hoping, I'm just hoping we don't get an exit signal here. And we just push all the way up. All right, there we go. All right. If this candle closes the way it wants to close, that will be an exit signal. So hopefully it doesn't, but it looks like it will close as an exit signal, which it did. So just a small loss of like 5 points right there for this trade. If price pushes up again, guess what? We'll get another buy signal. But this is a good thing about this exit signal. So sometimes they are far from your entry point, but a good amount of times they give you or they just give you an exit like either at break even or in and around break even. So for this one on that one account, for that little move, I just took like a $200 loss right there. But if we push up again and have a nice momentum to the upside, we'll get another buy signal. It is 9:30 a.m. I can hold on for maybe 5 or so more minutes to see if we get that another buy signal and kind of follow that. But that will be the last trade I will be looking to follow or to take today. So let's see. Either maybe this next candle. Let's see. So long as we've started, so we are in an area of consolidation. So I don't even think, let's see, if we break out of this consolidation, we might get, yeah. But anyway, right now we're in an area of consolidation. So I really don't see much that's going to happen. Let's see. Let's give it like 5 minutes and then see how that goes. So unfortunately, this did close. We did have a buy signal in the regular crosses, but it didn't show up down here because it's in a consolidating area. And sometimes this will happen. So this might be the buy signal that pushes up like 200 points. I think we saw that either yesterday or, yeah, yesterday, or maybe I saw that on Friday or Monday. So sometimes you'll have a signal that is in a consolidating area, and that signal will now be the one that's going to push up like 200 points, 100 points. But you just have to, you know, use your own judgment, because the other option is to take each and every signal regardless of whether or not it is in a consolidation zone or not. But then what that will end up happening, you'll end up taking like small multiple losses here that add up. So for example, you can take 5 trades, and even though you don't lose too much, you lose like $250 each for those 5 trades. And then guess what? You end up having a net loss of $1,250. And then maybe you get a nice move that goes up 1:6 risk to reward, or 1:3 that gives you $1,500. And then you just end up having like $250 in profit because you choose to take each and every signal. But you see, like for me, I'm still up 17. So 1,700 minus 200. So I'm still up like 1,500 for the day just by taking four signals only. But if I had taken each and every one of these signals, guess what? I would probably even be negative for the day on this one particular account. But yeah, I don't see too much happening, but that will be it for today. I'm still going to look at what we are going to move to for the official trades. I really like the multiple crosses, and we'll probably end up using that. But I feel like I need more data, more than like the data for this month, and then we can kind of figure out maybe or whether or not that's where we're going to move to. But other than that, that should be it. I will see you guys tomorrow. Have a good rest of your day. All right, guys. Peace.